It seems like, man, every time I check the market news these days, it's just another wave of red.
Yeah.
You know, President Trump's definitely stepped up the tariff talk, and it's clearly spooking investors.
Yeah, for sure.
We officially saw the S&P 500 enter correction territory for the first time since like way back in 2022.
It's a real shift in sentiment.
Yeah.
And we're seeing it reflected in more than just the stock market, too. You know, consumer confidence numbers are softening. And the latest ISM survey indicates a contraction in the manufacturing sector in March. So it really paints a picture of just growing economic uncertainty.
Yeah. And what's been particularly interesting to see is just like how widespread the impact is.
Yeah.
Even these high-flying AI stocks, which just a little while ago seemed almost untouchable, are now feeling the pressure.
Yeah.
Despite not having, really significant direct exposure to these specific tariffs. So against this backdrop of, market jitters, we started thinking, are there any companies out there that might offer like a relative degree of safety?
Yeah, and that line of inquiry led us to Philip Morris International.
Okay.
Ticker symbol PM.
EM.
Now, it might not be the first name that comes to mind when you think about like a growth stock.
Right.
But when you look at its recent performance, it's really hard to ignore.
Ignore is the last thing you want to do.
Right.
Over the past year, as of April 2nd, Philip Morris has surged by a remarkable 69%.
Wow.
On top of that, it's currently offering a very solid 3.4% dividend yield.
That's great.
And here's a bit of a, long-term financial history for you.
Yeah.
It holds the title of Dividend King.
Oh, wow.
Having increased its dividend every single year for over half a century.
Just,
a streak that even predates its split from Altria back in 2008.
Wow.
So for you, our listener, the core of this deep dive is to really dissect why Philip Morris appears to be navigating these turbulent times so effectively.
Yeah. What are the underlying factors there?
What are the factors?
Yeah, that might be insulating it from the trade war anxieties that are weighing down so many other sectors.
Right.
So let's start to unpack this.
Absolutely. So the first key element, I think, in understanding Philip Morris's potential resilience lies in where the bulk of its business actually takes place.
Yeah.
You might recall that in 2008, Philip Morris International and Altria essentially divided the global market.
Yeah, that separation was a pivotal moment.
Right.
Altria took the reins for the U.S. market, while Philip Morris International took on the responsibility for selling, those familiar cigarette brands like Marlboro across virtually all the international markets.
And the geographic distinction remains largely true today.
Yeah.
Now, Philip Morris has made some moves to re-enter the U.S. market.
Oh, right.
Most notably through its acquisition of Swedish Match.
Yeah.
The maker of ZYN nicotine pouches. And the introduction of its IQOS heated tobacco product.
Yeah.
However, it's crucial to emphasize that the overwhelming majority of their revenue still comes from outside the United States.
Right.
So when we talk about U.S. import tariffs or the potential fallout from a broader trade war initiated by the U.S., Philip Morris simply doesn't have the same direct exposure as companies with extensive U.S. operations or those heavily reliant on imported goods.
Right.
And it's not just about where they sell their products.
Right.
Their supply chain also plays a significant role.
Oh, interesting.
They source tobacco, their primary raw material, from various regions around the world, including the U.S.
Okay.
However, the risk of tariffs significantly impacting those exports seems relatively low.
Okay.
And this is where I think a really interesting detail emerges.
Okay.
During their most recent earnings call, their CEO, Jacek Olczak, specifically voiced concerns about potential tariffs.
Oh, interesting. What did he say?
He highlighted the fact that their manufacturing and supply chain are largely organized on like a regional basis.
Oh, so they're kind of prepped in a way.
Yeah. To give a concrete example, he mentioned that the vast majority of the ZYN oral nicotine pouches sold in the U.S. are actually manufactured right here in the U.S. domestically.
Oh, wow. That's interesting.
So if we step back and look at the bigger picture, their primary focus on international markets, their diversified sourcing of tobacco, and their regionally focused manufacturing. It really does appear that Philip Morris has established a considerable buffer against U.S.-imposed tariffs.
Yeah, they've strategically positioned their business to navigate these particular headwinds more effectively than many companies with a greater reliance on U.S.-centric operations.
Yeah.
And that naturally leads us to our second key point.
Okay.
The inherent nature of the core product they sell.
Ah, yes. The argument that tobacco, for better or worse, tends to be what some might call a recession-resistant product.
Right.
Could you elaborate on the dynamics at play there?
Certainly. Tobacco is generally classified as a consumer staple.
Okay.
And these are the kinds of essential goods that consumers tend to continue purchasing at a relatively consistent rate, regardless of the overall health of the economy. You think about necessities like food and basic household items. And yes, tobacco often falls into this category.
It's that idea that even when people are looking to cut back on spending, certain ingrained habits are harder to break.
Exactly. And beyond just being a staple, tobacco has historically demonstrated what economists refer to as price inelasticity.
Okay.
And what this means is that even when the price of tobacco products increases, the demand for them doesn't decrease proportionally.
Interesting.
We've seen this phenomenon play out in various markets where significant excise taxes have been implemented, including in certain regions of the U.S. While there might be a gradual softening of demand over the long term, it tends to be relatively resilient to price hikes in the short to medium term.
And Philip Morris International has a history of capitalizing on this characteristic, haven't they?
Yeah, they have.
They've generally been able to implement price increases without experiencing a significant drop-off in sales volume.
Yeah, that's a key factor in their consistent profitability.
Right.
You know, their ability to strategically raise prices and maintain a relatively stable level of demand is a significant driver of their strong operating margins, which, as you pointed out earlier, compare favorably, not only to their former parent company, Altria, but also to many other players in the broader consumer goods sector.
So the underlying logic here is that even if these trade wars were to contribute to like a broader global economic slowdown or even a recession, Philip Morris is likely to weather that storm much more effectively than companies that sell more discretionary goods or those heavily dependent on robust economic growth.
That's the central thesis.
Yeah.
In times of economic hardship, consumers might postpone big-ticket purchases like vacations or new vehicles. But the demand for tobacco products tends to exhibit greater stability. And this inherent resilience provides a significant degree of protection.
Okay, so limited exposure to the U.S. market and the characteristics of a recession-resistant product. Those are certainly compelling arguments for their potential insulation. But you also mentioned earlier that Philip Morris has been demonstrating strong recent growth. That might surprise some who still view the tobacco industry as being in a long-term decline.
And that's where our third crucial point comes into play. It's vital to examine Philip Morris International's recent financial performance. Particularly what we've seen so far in 2024. The numbers really challenge that outdated perception of a shrinking industry.
Lay out the key figures for us. What's been happening financially?
So in 2024, their overall revenue has shown robust growth, increasing by a healthy 7.7%.
Wow.
To reach $37.9 billion. However, the real story lies in the exceptional performance of their smoke-free products division, which encompasses offerings like ZYN and IQOS. Revenue in this segment has surged by a significant 14.2%, reaching $14.7 billion.
Wow.
This substantial uptake, particularly in markets like Japan and Sweden, where harm reduction policies are more prevalent, suggests a genuine consumer shift rather than just a niche trend.
Interesting.
Yeah, it seems to be really taking hold.
So that's a substantial expansion in those newer product categories.
It is.
It indicates a real evolution within the company.
It does. And while traditional cigarette sales still contribute a significant portion of their revenue, the company has made a very deliberate and, by all indications, a successful transition towards these next-generation products. These smoke-free alternatives now represent a substantial and growing part of their overall business.
Sounds like.
As of the fourth quarter, they accounted for 40% of Philip Morris's total revenue. Wow. And an even larger 42% of their gross profit.
So they're not simply relying on their legacy business. They're actively innovating and adapting to changing consumer preferences.
Exactly.
And potentially shaping the future of their industry.
Precisely. And that strong financial performance in these growth areas is clearly being recognized by the market.
Yeah.
The 69% jump in the stock price over the past year isn't just a fluke.
Right.
It reflects the fact that the business is successfully executing this transition and delivering tangible results.
And it sounds like even if we completely set aside the complexities of the tariff situation, Philip Morris would still be presenting a rather compelling growth narrative.
Absolutely.
Based on this strategic pivot towards these newer product lines.
The successful diversification into smoke-free alternatives provides a significant and promising avenue for future growth.
Right.
Independent of any trade-related factors. And we've even seen evidence of this resilience in the recent market volatility.
Oh, interesting.
In March, while the S&P 500 experienced a 5% decline.
Wow.
Philip Morris stock actually saw a 2% increase.
Oh, wow.
And looking at the year-to-date performance, it's up by an impressive 30%.
Really?
Making it a real standout performer in what has been a rather bumpy ride for the broader market.
So, as someone tuning in and considering their investment options, what's the overall perspective on Philip Morris International right now?
Well, when you take into account their solid and growing revenue, their healthy profit margins, and the significant momentum they're building in these newer growth-oriented product categories, Philip Morris International certainly warrants consideration as a potentially strong buy candidate.
Okay. And for those investors who might be specifically concerned about the uncertainties surrounding the U.S. market, or are looking for ways to potentially mitigate their exposure to tariff-related risks. It sounds like Philip Morris offers a particularly interesting and perhaps attractive option.
Exactly. It appears to offer a combination of factors that are appealing to investors seeking both growth potential and a degree of insulation from the current economic uncertainties.
So for you, our listener, the key takeaway is this. Philip Morris International presents a really fascinating case study of a company that seems to be relatively well protected from the current trade tensions. This apparent insulation isn't due to just one single factor, but rather a combination of its primary focus on international markets, the fundamentally resilient demand for its core product, and its proactive and successful transition into new and growing product categories.
And this brings up a broader point to consider. Given the powerful and often unpredictable forces at play in the global economy today, what other seemingly traditional industries might be undergoing similar, perhaps less obvious transformations that could ultimately lead to unexpected resilience and new opportunities for growth?
Interesting.
It's definitely a question worth exploring further in your own research and thinking.
I think that's a great point to end on.
Yeah.
Thanks for joining us.
Of course.
And we'll see you next time.
See you next time.